Hello, everyone, and welcome to another episode of Majlis and Markets. As always, I am your host, Hassan Jivraj. I'm really happy to be doing another episode on YouTube. I don't know what episode we're at. I think we're at episode 64 overall, but I think this is maybe the fifth or sixth episode on YouTube. So please do bear with me as I still get used to doing YouTube. And remember to like, share, and subscribe to this podcast. And as always, this podcast will be available on YouTube and all audio platforms. But now I'd like to introduce my guest for this episode, Dr. Ryan Lemand. Dr. Ryan, welcome to Majlis and Markets.
Hi, Hassan. And I'm very pleased and happy to be here. Thank you for inviting me.
Ryan, it's really great to catch up with you once again. I met you for the first time in person through our mutual friend, Ashish Marwa, who I've known for a number of years. And he's like a really great guy. And he's like really well informed about financial markets, not just in the region, but globally and across all global asset classes. And back in my financial journalism days, I was always calling him. And I was just surprised, like he would come, like if I asked him even the most like randomest thing, he would always give me like a really nice succinct answer that I could use in my articles. And it was really a fantastic relationship. And hopefully we'll get to see him again when I come back to the UAE soon. But Dr. Ryan, you've got like a really fascinating background. You've got your own story, and obviously you're working with Ashish these days, and you've done a lot. You've been on the regulator side as well as the portfolio side and a bunch of other things as well. And I must also mention today that the FavorCon social media numbers have come out, and you're ranked as one of the top voices for social media marketing within the finance industry. And I think you're number 6, is it 96 in the world out of 200?
6 in the UAE and 96 across the world.
Oh yeah, so 6 in the UAE and 96 globally. So wow, that's a very stellar resume you've got there so far. But Dr. Ryan, I really want to talk to you today about lots of different things. Obviously, we can talk about gold, we can talk about cryptocurrency, by extension Bitcoin, meme stocks as well, which I think you're very interested in as well. But before we get into all of that, could you give our listeners and viewers your early background story?
Absolutely. So I grew up in Paris, in France, and I did my studies there, obviously. My studies were basically in economics, econometrics, and applied mathematics. And my PhD was basically an applied mathematics PhD to financial markets, where I introduced a new model with regards to measuring contagion effect. And part of it was also was using neural network methods, which are today used for AI, as you know. Working in the trading and portfolio management and credit derivatives, and started climbing the ladder until I headed the whole credit derivatives portfolio management business for a company called Fortis Investments. It was the 4th largest in Europe back then. And unfortunately, during the financial crisis, Fortis Group did not survive, and it was acquired by BNP Paribas. And then in 2008, I came to the UAE to work for the federal government. And thanks to my specialty in credit derivatives and applied mathematics, specialties that were needed at the time in the UAE. So I worked for the federal regulator for 7 years, from 2008 to 2015, where I worked on a number of regulations in the UAE that didn't exist before. One of them is the funds regulations, which came out in 2012. It was really the first funds regulations in the UAE under the federal regulator, and then multiple ones. And then in 2015, I joined a financial service group here in Abu Dhabi, where alongside Ashish, my good friend and long-term partner, we created the wealth and asset management business for that group. We spun it off into Abu Dhabi Global Market, Abu Dhabi's financial free zone, and then grew it. And then we left to create NeoVision Wealth Management. So NeoVision Wealth Management today is a company that has a wide scope license where we can do wealth management, asset management, advisory, fund management as well. And the flagship activity is funds as a service, whereby we create funds, white labeled, standalone, fully serviced from A to Z for foreign fund managers, fund sponsors, family offices, anyone who wishes to create a fund in ADGM. We help them do that under our umbrella, and we operate it for them so they can implement then their investment ideas. So we've become today one of the main fund platforms here in the UAE offering that service. Now, parallel to all of this, I've also served as an independent non-executive director on a number of firms, locally and internationally. One of the most famous ones is Binance. I'm sure we're going to discuss Bitcoin today. And this helped me learn a lot about Bitcoin, because more than 50% of Bitcoin volume goes through Binance. So you learn a lot when you sit on the board of such companies. I sit also on the board of directors of Bitpanda as well, the Austrian company, fantastic company, and a few other companies that do private equity, private investments, and brokerage.
MashaAllah, you've done like a lot in this career. Like you've been on, it seems like you've been doing everything. You've been on the portfolio side, on the regulator side, on the NED side, and you're still going strong. MashaAllah, that's really great. Dr. Ryan, you mentioned about NeoVision. Could you tell our listeners and viewers what exactly is NeoVision and what's the mandate?
So basically, NeoVision has what we call a 3C license. This license allows the company to practice certain certain number of activities after getting endorsed by the regulator. So these activities include arranging investments, advising on investment, managing collective investment funds, etc. So it's a very wide scope license. Now, thanks to the demand for funds here in the UAE, we made it that the flagship service has become Manco services. So Manco, or management company service, is something very known in Europe. It started in Luxembourg 50 years ago, where people use an existing fund management company as a fund platform to create a fund they wish to market for in that area without having to get their own license. So that's a concept that we brought here into our jurisdiction, and we started it into our previous company. And now today we've perfected it, and it has become really industrial for us. And it ticks all of the regulatory boxes: risk management, compliance, MLRO, KYC, etc., etc. So this service of creating funds is basically, it's like an Airbnb, if you will, for funds, whereby you use us to create your own fund that is white labeled, and we operate it for you to satisfy the vision, the investment vision that you have.
Amazing. Dr. Ryan, before we go into the alternatives and the different asset classes that I want to talk to you about, what does a typical day look like for you? Now, I've heard you on other podcasts before talking about your interests and stuff, but what does a typical day look like for you?
So a typical day, I'm generally in the office quite early at 7:30 a.m. This is when I do, basically, because I still do some academic work. So I have 2 published books and a number of published articles in international journals. So this is when I do basically my research work, my academic work. I also work on my LinkedIn posts because it's something that takes quite a bit of time, and admin, reading, whatever I can clear before really the day starts around 9:30 a.m. what I do. And then at 9:30 a.m. the action starts. Everyone is in the office and we start dealing with the pipeline. Whatever projects we're working on, our target is to push each project forward, even by a little bit, every single day, such that we accomplish progress every single day. So the day goes by, it's an open space here, so we talk to each other and we progress on the various projects. We solve problems, we receive clients, we build our pipeline, and it goes on and on until the end of the day. This is really a typical day. It gets interrupted usually with a TV interview or a podcast, or like we're doing right now, but that's generally the day.
Yeah, I really, like I was saying to Ashish when we last met, I don't know how you have the energy to do all of this and your academia and go on like Arabic television channels and also the English channels as well to talk about like breaking events as they're happening. Like I've always just seen you on the different TV channels, and mashallah, you do like a really great job. Ryan, we had Charles-Henri Monchu on the podcast a few months ago talking about alternatives, and we talked about gold, we talked about crypto, and that was like a nice introduction for our listeners and viewers who wanted to learn more about alternatives. From your perspective as somebody who's been in this industry for a while, or quite a while, how would you characterize alternative assets?
Alternative assets today, I would like to classify them into private equity, private investments, which is really today the leading asset class. So today for investors, especially that private equity today got a bit more democratized than before. So previously you had a private equity fund where the minimum ticket would be $5 million. It went down as low as $500,000 and sometimes even lower. Some companies have even started fractionalizing tickets into private equity. So private equity basically consists of doing a private investment as opposed to buying a share of a company or a stock of a company that is listed on the stock exchange. So when you invest into a private company, this gives you what investing into a listed company doesn't give you. So it's a company that is still in the growth phase, that hasn't matured enough to go into public listing. It gives you high returns. So it's an asset class that provides sort of an hedge against stock markets. So that's something we have encouraged for several years now, especially with the US markets being very much overvalued and very, very volatile. This asset class provides a fantastic diversification for a portfolio, whereby it could be the anchor of the portfolio, because private investments or private equity are generally long-term investments. It's not something you hold for 6 months. It's generally 5 to 7 years. So that would be the anchor of your portfolio. So some of these private investments, they do generate income, where there's income distribution. So it would be your low volatility, if you will, anchor parts investment of your portfolio, on top of which you put listed stocks, income, treasuries.
Amazing. Yeah, Charles-Henri was like talking about how it's not correlated with bonds, public markets. And, investors over the past, say, 10, 15, 20 years have been really interested in that. And obviously, one of the asset classes that you're very familiar with is cryptocurrency, and specifically Bitcoin. We had Alex Shihadi, who used to run Binance's Middle East operations in Dubai for a while, a couple of years ago, and we had a nice conversation about that. From your perspective, to begin with, do you think cryptocurrency and Bitcoin by extension is a currency or an asset?
It's an asset. It's not a currency because it's, in my opinion, it's not a store of value and it's not a medium of exchange. I consider it an asset just as much as any share or stock, if you will. I do not see it similar to gold in any way, and I think its behavior, its price action, when there's volatility in the market, showcases very clearly that it's different from gold. It's something else. We always tend to, or want to, or need to compare it to something, but I don't think we cannot compare it to anything else. So you have stocks, you have listed markets, you have treasuries, you have private investments, you have commodities, and then you have Bitcoin. It's a virtual asset. It's an asset class on its own, and we don't have to compare it to anything, actually. So I generally don't like to compare it to anything. See it as an asset. It's a very funky asset. It's a new thing that is based on a technology that, in my opinion, has a great future. Blockchain, because it creates efficiencies. As soon as we take care of that power issue, it could become an amazing way to settle trade, to settle real estate, to use it in government transactions, etc. So it's, for me, it's the underlying technology. It is a proof of concept. I don't consider it as a finality. I think cryptocurrencies or virtual assets, their future should be a bit better than just Bitcoin.
I mean, in 2009, when the white paper was released, most people thought it would be like a currency. Why do you think it's not a valid currency?
It's too volatile to be a currency. So we've seen it was 108. Now it went down to below 100. So when you're buying merchandise with it, it behaves like the currency of a distressed Southern American country or a distressed emerging market. So it's not really reliable as a currency to be used unless the whole universe or the whole earth adopts it. Then it's agnostic to volatility. But as long as the reference is the US dollar, we always say how much is the Bitcoin, right? And we say it's $105,000. It doesn't have an intrinsic value on its own. We need a relative value to say how much it's worth. And it's thanks to the US dollar. And this is what's creating that volatility and makes it counterproductive to be used to purchase items.
But if you look at countries like El Salvador, which tried to introduce it as legal tender, and then, El Salvador had its own story, right, with its financial situation, and the IMF wasn't too happy when they were talking about introducing it as a legal tender. I mean, why do you think a lot of these multilateral institutions don't like it when countries try these kind of experiments?
Even banks, see the big CEOs of big US banks, they were very much against it because it makes banks and it makes these large international organizations obsolete or not needed anymore. It's completely natural for them to react this way because you're detaching yourself, you're extracting yourself from the system that is across the world. It was a very good experiment, I think, on one end on how it went, but also the reaction of these international organizations and these banks and the hostilities they've exhibited.
I mean, if you listen to Larry Fink, Jamie Dimon before like 2020, a lot of them would say, even Warren Buffett to a lesser extent would say Bitcoin is a scam, cryptocurrency is a scam, but now they all seem to be changing their tunes and saying like, we want to get in on the action and smart money is pouring into Bitcoin ETFs and other things. I mean, they seem to have changed very quickly. Does this necessarily mean that Bitcoin and by extension other cryptocurrencies are really decentralized? Because it seems now that the smart money is coming in and a lot of legislation is being changed or trying to be introduced. Do you think this is really a decentralized asset class as it once was?
So on paper, if you could look at the blueprints, yes, it is decentralized. But in practice, I don't think it is. For two reasons. One reason is whales. So whales are holders of very, very large cryptocurrency amounts that can influence the market. So this makes it less decentralized, in my opinion. The second reason is governments. So if you look at governments around the world, the second largest holder of Bitcoin in the world, the government, is the US government. Guess who's the third? It's the Chinese government. So this tells you a lot, right? I'm less comfortable with it, knowing these facts, than knowing that it's really very much fragmented and decentralized over the current holders of Bitcoin.
What about countries, I've just come back from Turkey recently, where they've obviously been going through their hyperinflation, but like very, very high levels of inflation over the past couple of years, and lots of their currency has been devalued. Do you think countries, particularly like war-torn countries like Syria and other countries, could use Bitcoin as a form of currency? in their reconstruction?
I don't see why they would, because fighting inflation requires deep economic reform. And when you actually use Bitcoin, you're masking the problem. You're just putting makeup on something that is ugly. So, or putting perfume on an ugly smell. Basically, when you have hyperinflation, currency issues, etc., they are a symptom. They are not the cause. The fundamental cause is economic, and you have to fix the economic problem through economic policy. And then these symptoms would just go away. Hyperinflation would just go away, and currency issues would just go away. So no, it's not something I would condone or endorse.
I mean, if we take it back to the 1970s when the US came off the gold standard, do you think like this idea of currency, right? Obviously the US came off because they wanted to fund the Vietnam War exercise and everything. And, countries now are running huge deficits. They can print money until the cows come home. I think the US deficit is in the trillions of dollars, and it'll never get repaid. Do you think these countries are addicted to debt? Do you not think like Bitcoin, because there's a finite amount, no?
Again, I don't believe in it, and I do believe there has to be economic reform. So look at the US. You mentioned the US. I think one of the biggest mistakes they've done was Bretton Woods, delinking the US dollar with gold, which basically allows them to take astronomical amounts of debt. So if you look over the past, 40, 50 years, the US has accumulated $12 trillion of debt, and only in the past 4 years accumulated $12 trillion of debt. So you see, whether you have Bitcoin or not, it would just allow you to spike your debt. And there's always a way, even if there's a finite amount, because this will reflect into the price. So again, you have to fix the fundamental economic problem, and resorting to so much debt to push a problem forward, kicking the can down the road.
Why do you think President Trump is very in favor of Bitcoin or cryptocurrency? Why do you think he's in favor of that? There's this argument that he wants to leverage as much as he can by going down the Bitcoin route, because the US Treasury market is very full. Is that a good reason, do you think?
That's one of the reasons, and I cannot detach it from him wanting interest rates much, much lower, because one, financing the US debt is astronomical at the moment. It's taking more than 25% of tax receipts. It's exceeding the defense budget. So he needs to lower that tab. And second, be able to take on more debt. I mean, look at the budget that was approved. It's really astronomical. There's no reduction whatsoever. Now, in absolute, debt can be controlled. I mean, look at Japan, look at Singapore. We're talking about debt to GDP in excess of 200%. But there's an economic plan. They have an economic plan. Whereas the US, they're taking on debt without any plans. Singapore, for example, their debt is internal, which is fine. It can be handled. Whereas the US, most of it is external. So let me give you another number. If you look at the net investments of the US, it's minus $26 trillion. That shows you how much their investments coming into the US as opposed to investments done by the US abroad. So these minus $26 trillion is how much more foreigners have invested into the US by buying treasuries, stocks, etc. This is a very, very dangerous problem, which we're starting to see today. So the United States today is no longer a AAA country since it was downgraded by all rating agencies. And as we all know, there are many institutions and governments who would not buy treasuries or bonds of a country that is not AAA. So that is why we're seeing today that there's much, much less demand for the longer term treasuries, 30 years or 20 years. And the demand is shorter. Many insurance companies are not buying treasuries anymore because the US is no longer AAA, is no longer what we call risk-free. So it's really problematic. And I think President Trump, in his actions, is, I think, trying to postpone the problem. So try to make a feel of, yes, economically it's fine. It's like you as a household, you're having some money issues today, and you take a big personal loan and you make your family feel better. It's very temporary. The problem will have to come later.
Yeah, it just feels like President Trump, we can't obviously forget about his policies with the tariffs and everything. And it seems like international investors that traditionally would buy, as you mentioned, US treasuries as a safe haven, are now looking at other asset classes like gold, cryptocurrency. Just on this point of cryptocurrency, do you see any value in anything else other than Bitcoin, or do you think Bitcoin is the actual gold standard for cryptocurrency?
Absolutely. Bitcoin is. With all of the issues that surrounds it, whales, governments, and third, sort of a security issue I have, because basically the cryptogram that is used by Bitcoin is a cryptogram that was patented by the NSA in 1995. Many people could look that up, can fact check me, but This is also a concern. Another concern is ultimately it is based on technology. It's based on a computer system, a program, a cryptogram. Do we know that there's no backdoor? Do we know anything? I have looked and I haven't found anything. That's also a concern. So I have several concerns around Bitcoin, but nevertheless, I think it is today the flagship cryptocurrency, and the other lesser known ones could be more concerning than Bitcoin.
Dr. Ryan, I read an article in the FT over the weekend that a lot of companies are buying Bitcoin. Strategy did a really good buying a Bitcoin in 2020, I think, and then other companies as well, like Tesla, have also bought large stocks of large sums of Bitcoin. Why are companies, particularly American companies, buying large sums of Bitcoin at the moment?
Well, they're leveraging on President Trump's arrival and the creation of a new regulatory framework, which came out a few days ago. So I think this is their bet, that the demand for Bitcoin will spike. And as you mentioned, the limited supply will push prices up. So it's more of a long-term bet than a short-term bet.
Interesting. And if we shift a little bit from Bitcoin, obviously the one that everyone's talking about at the moment is gold. We'll come to meme stocks in a minute, but gold's been rallying a lot this year. I think in April it hit 3,500, if I'm not mistaken. Some people are predicting it will go to 4,000 by the end of this year for the first time in its history. We had the World Gold Council under Naylor on a few months ago talking about the reasons. From your perspective as the investor, why do you think gold is rallying right now?
Gold, the main reason behind its rally over the past few years, and this is why we have recommended gold more than 2 years ago actually, was simply the BRICS countries, Eastern countries, starting to buy gold, seeing the economic trajectory of the US. So when the US, and as I mentioned, during the Biden administration has taken $12 trillion of debt in just only 4 years, that's as much of 40 or 50 years of debt taken on by the US. Large chunk of it happened during COVID-19, during the pandemic. So when these countries saw that the US dollar's debt is spiraling out of control, it was an obvious concern that it would be downgraded from AAA, and second, its ability to repay its debt over much longer term. So many of these countries decided to start diversifying away from just buying treasuries to also buying gold. So if you look at specifically US dollar being used as a currency reserve, it was around 65% 15 or 20 years ago. Today, it's less than 50%. So these 15% difference drop in the usage of US dollar as a currency reserve have gone to gold. 1 for 1, literally. The US dollar is being replaced as a reserve currency, at least partially, by buying physical gold. This constant, relentless buying of physical gold is what pushed gold prices up, because nothing beats the buying of physical gold, reducing supply basically, or inventories, to push prices up. And this will not stop in the foreseeable future, in our opinion.
But you don't think that it's expensive? It's expensive to insure the gold physically. You've got to put it in the vault and everything, and you've got all these other costs, intrinsic costs as well. Do you not think that's expensive to do that?
For a central bank, no. And it's central banks who are pushing gold up. I own a safety deposit box in Switzerland that is costing me 600 Swiss francs per year. It's one of the safest, most secure countries in the world. And this is where basically I put my physical gold that I buy on a regular basis. So it is not that expensive for people who really wish to buy gold and store it as a long-term investment, as opposed to ETFs.
How would the interest rate cut in the US impact gold prices, do you think?
I don't think it will impact them much, because this buying that is happening, not only central banks have come to the realization that they need to diversify even a little bit from US dollar. And let me be very, very clear. I'm not preaching the collapse of the US dollar or the end of the US dollar as a currency reserve. Not at all. This will take decades to happen for the US dollar to stop being a currency reserve, or just partial currency reserve. So people have come to this realization that they need to diversify that the safe assets that they buy with their savings. So I do not think the drop in interest rates will affect it much. On the contrary, I think some money will come out, some cash will come out of fixed deposits and interest-bearing instruments and go to gold, actually.
What about other precious metals? Do you see silver playing a role as well?
Silver, we've seen a fantastic rally happen. Yes, I think silver can continue to rally, especially that it has actually a usage, industrial usage. However, the problem with silver is storage, because if you compare pricing points, an ounce versus an ounce of gold versus an ounce of silver, well, you'll need substantial storage to store silver. And I personally only believe in physical purchases of these commodities rather than paper ones. So I still have a preference for gold.
What about things like ETFs? Do you think gold-linked ETFs are any good, or do you think they're risky?
They're good, they're easy. The problem is that they don't buy gold one for one. So basically, you're taking the risk of the ETF issuer here. So if there's a international financial crisis and your ETF issuer for where you bought the gold turns out to be another Lehman Brothers, that would be problematic. So the purpose of gold is to hedge against extreme events, tail events. Right? So when you buy an ETF, you're defeating that purpose because you're afraid that there's, let's say, a system collapse, financial system collapse, just like we've seen in 2008. So buying an ETF, you're defeating the purpose of you buying gold in the first place.
Do you think gold will exceed $4,000 by the end of this year, or do you think that's a bit far-fetched?
I think it will exceed $4,000 by the end of this year. I don't know. It's very hard to forecast. I actually didn't expect it to go to almost 3,500 that quickly. You never know. I don't have a price target for gold today, but I do think, yes, it can exceed $4,000.
What about this idea of, obviously the UAE, particularly Dubai, is very famous for gold trading. Do you see like the UAE taking on more of a role in facilitating gold trading or other places doing this as well?
It actually already does. It already does facilitate that. Yes, the UAE is just increasing over time with its trading activity, commodities in general, even international currency settlements. So we've seen oil settle with India using UAE dirham. So yes, the UAE is playing a bigger and bigger role on the international scene in that respect. Yes.
Yeah, it just seems that the UAE is a very mercantile, very like pro-business, pro-trade kind of thing, whereas countries like Saudi Arabia, Bahrain, they're trying to catch up as well. And yeah, you're right. Like I think India and the UAE settled in their own currencies for oil. Like a couple of years ago, this idea of a BRICS currency was being floated around. Do you like, to me, that sounds a little bit like unrealistic because, not all these BRICS countries like each other. Do you think a common currency is feasible longer term?
No, I don't think so. They're not very homogeneous. They have divergent political views in many cases, even divergent economic policies. So I don't think the common currency is anytime soon.
Yeah, it just seems like a little bit far-fetched, like because they all seem to be about the global south, but in terms of actual policy coordination, I don't really know. Well, from my understanding, they haven't really done too much since they were formed in 2008. But Ryan, if we shift a little bit also to the meme stocks, this to me is a really fascinating thing. I watched the movie Dumb Money in 2021. I watched what happened with the GameStop and some of the other meme stocks. For our audience, what exactly is a meme stock?
A meme stock is a stock that runs which viral social media vibe happens, and this spurs big buying. And the other condition is that it has to be done by retail investors or individual investors. So this basically started with COVID-19, where many people were sitting at home basically doing absolutely nothing. And they just got interested in buying stocks and the stock markets. And then they discovered that they can actually use their social media to communicate with each other and create waves of purchases to affect pricing. So they've become gathering themselves together among themselves. They've created a sort of an institutional investors that can actually influence the market. So they go and they decide to focus on one stock, they buy it, jump the price, and then they sell it, they take their profits. So a meme stock is like memes that we share on social media and they became viral. It's the same thing. A stock is communicated through social media and it becomes viral and creates buying sprees.
How important is it, do you think, that if we didn't have platforms like Robinhood or others to facilitate this trading? Because traditionally market makers and these big institutions are gatekeepers and they can control like really high prices. Do you think like these kind of smaller platforms democratized the trading?
They do, and I think this is extremely dangerous, and I'm totally against it. I wish regulators would make barriers to entry higher, because many people have lost their whole life savings in these things, literally their whole life savings. So I do not think investing into stock markets should be democratized as much as it's democratized today. That's something where we study years and years before we get into. And then you have this guy who takes his family savings, put them in, leverages 10 times to the moon and back, and goes and he loses everything. This is extremely dangerous. Just like I'm not allowed to drive a car without a driving license. I'm not supposed to go beyond 120 kilometers per hour. There has to be rules around who and how invest into stock markets.
Do you think, like, obviously people are swayed by the returns, the triple digit returns? They see like people making 130, 140%, similar obviously with cryptocurrency. But like if you looked at Roaring Kitty, for example, he was only one person who actually did quite well. And even he lost money as well. But everyone else seemed to like have been burnt quite badly.
It's greed, absolutely, and it's not only retail investors who are lured by greed. We've seen it even with institutional investors in previous crises that we've seen. I mean, 2008 was a pure greed play. I was in the credit derivatives business. There was this race towards higher and higher yields, leveraging more and more, slicing and dicing. So it's greed that leads to all of this. But when it's done by an institutional investor, there are insurances, there are protections, there's a regulator, there's risk management. So it's still in a controlled environment. But when you have masses of retail who do that, yes, it can be quite dangerous.
And obviously you, with your mathematical background, finance background, you understand the risks, you understand what to look for. But your traditional retail investor who sits like around not working full job or something, he's trading like these stocks as though, you know, it's candy or something like that.
Absolutely. And they basically use CFDs, contracts for difference, which is basically leverage. So you put $100 in your brokerage account and you have a buying power, sometimes $500 or even $1,000 with some brokers. So you just imagine your risk here is amplified by 5 times or 10 times. So you could get wiped out very, very, very quickly.
But at the same time, Ryan, like one of the things that I realized is that in terms of like the more incumbent institutional players, they didn't like what happened as well, right? And the system, like, not to be politically incorrect or anything, but like the system seemed to favor the more bigger hedge funds than, say, like the retail traders. That was one of the arguments that people were saying. Do you kind of see the point from their side as well?
So people basically wanted to get away with not having to pay management fees for funds that were not performing well, feeling they can do something on their own without needing anyone. It's like when you self-medicate, rather than having to wait for an appointment, go wait in the clinic and then go see a doctor who doesn't give you what you want ultimately. I'll just do it myself. It's like doing home repairs, DI. So it's very appealing, especially with these tools. If you're unable to buy tools, hammers, and etc. to fix your house, you wouldn't fix your house. So it's the same thing with stock markets. So today, when it's super easy to open brokerage accounts, extremely easy, and just buy whatever you want, leveraging 10 times sometimes. Yes, it's very appealing. Basically, it's gambling. Why do people go to Las Vegas and to casinos? Because it's something that gives rush to human beings. Even though they're taking a lot of risk, they might lose everything, but they still do it. And it's the same thing. It's gambling. This is not investing. And I think brokerage companies and regulators should not allow retail investors who have zero experience from getting CFDs, contracts for difference, and buy on leverage.
Yeah, when you talk to most sophisticated investors or people who've been in finance for a while, they always say to me, it's time in the market, not timing the market. And, there was an interesting thing that I noticed you mentioned as well. A few weeks back, the UAE introduced this new law where finfluencers, so this new idea of influencers who give financial advice or make financial content in the UAE are now going to have to be regulated. Do you think that that's a good step? And also, by extension, do you see other countries doing some similar thing to that?
So this is a bit of a controversial step, because an influencer, it's like there are influencers who give you skincare advice, influencers who give you how to raise your children. So you cannot go regulate every single influencer in each space. If I had, and that's my personal opinion, it's not a criticism for anyone. If I had to regulate, I'd rather go to brokers and tell them, you have to evaluate. So when you do KYC, it's not only your passport copy, utility bill, etc. You have to actually test that retail investor before you give him 5 times or 10 times leverage. Then problem solved. The influencer can say whatever he wants, no damage could happen. Now, In the UAE, this was taken because some of these influences have gone overboard, and it has become really too much and everywhere, because the UAE has become a magnet to influences and social media stars, and they wanted to make some order into it. This is how I see it, more than I see it as really pure financial organization.
Yeah, what's interesting, I think this is part of a broader trend, right, is that people generally, from what I'm seeing, from a 13, 14-year career in journalism, is that people don't use the mainstream media anymore, or don't use mainstream sources. They go through everything, whether it's Reddit forums or Twitter or X now, or like podcasts like this or others to get their information. How do you think this information changed the way we digest information, the way it's done and also digested? Do you think that's also playing a role as well?
Oh, Hassan, you're talking about last century. People used to go on Instagram and TikTok to watch short videos to get advice. Today, they're using ChatGPT.
Yeah, that's very true.
Today, couples they're pasting or describing their relationships into ChatGPT and asking him, the machine, what it thinks about their relationship to know how to handle their partner. So this is the path that we're going through. It's much less social and much more machine driven, and today AI, whether ChatGPT or any other, is not unbiased. It is not unbiased. So some of them, you find them a bit more woke than others. Some of them are right-wing, others are left-wings. You see what I mean? It's not something that you can rely on or use. So social media is something very, very dangerous. Again, like many of the things that surround us.
Indeed. As we bring the podcast to a close shortly, Dr. Ryan, one of the things I wanted to ask you, we're in June, we're towards the end of June 2025. I was about to say 2023, I've already started 2025. But what are your predictions for the second half of this year? Do you think we're going to see more volatility? We're recording this episode with what's happening in the region. Financial markets seem fairly okay. The US, I don't think, has opened yet, but the regional markets don't seem to be too affected. I mean, how are you seeing things for the second half of this year?
I think not for the remaining year. I think for the remaining term of President Trump, it will be three things: volatility, more volatility, and even more volatility. I think this is what we're going to see until the end of President Trump's term.
And do you see, which asset classes? Do you think gold is going to continue? Do you see other ones as well?
Yes, the stability is real assets like gold, like private investments, like real estate. And the volatility will be mainly in longer term fixed income and in overvalued.
And what about things, I know you're heavily involved in this as well, things like digital assets, tokenization. Do you see that going off in the second half of the year as well?
Absolutely. And especially when you do tokenization linked to real assets like gold or like real estate. Yes, I think these have a future because they allow the fractionalization. Prefer a gazillion times taking from a retail investor $5,000, where these are invested to a tokenized fund and then ultimately in a building that is rented out at 9% per year yield over the next 7 years, then this investor taking these $5,000, leveraging it up 3 times to $15,000 and buying NVIDIA with them.
Yeah, it seems more volatility is on the way. As an investor, you must find it quite difficult predicting, because Donald Trump may say one thing one evening and then all of a sudden he wakes up 3 a.m. and tweets or goes on Truth and says I've changed my mind completely. So how do you plan against that?
That's why it's better to stay from overvaluation, extreme overvaluations. And it's obvious where it is. You have to know that every time this will happen, overvalued stocks will be very volatile. So simply stay away from them. It's not that there are no alternatives. There are alternatives today.
Ryan, tell us any projects you may be working on, any upcoming projects you may be working on.
Yes, we're working on multiple projects at the moment. A tokenized fund. We have a real estate fund. We've taken over very recently a very large REIT that we're managing. It was announced in the press all over. We have a couple of private equity funds coming up. So we have a very healthy pipeline until the end of the year.
Amazing. And obviously you're very active on social media. I always class you and Charles-Henri Monchu as the most active finance guys in the region. You're always tweeting. I don't know how you have the energy to do, in addition to your interviews and stuff and your day-to-day work in the academia. You must, I don't know what you're taking, but it's working. You're doing a lot of good stuff. But on social media, you're active where? On LinkedIn, or is it Twitter mostly?
Only LinkedIn. Twitter, I go there for more information. What I don't like about Twitter is that you don't have a name behind the account. On LinkedIn, when someone comments on a post, I know his name, I know where he works, so he behaves. There's more civility on It's much more civilized on LinkedIn than on Twitter. Twitter, you don't know who's behind the account. It can be anything, anyone. So that's one of the things I don't like about Twitter.
Okay, I'll link your LinkedIn bio in the show notes. But Dr. Rand, this has been a really fantastic conversation on alts and your thoughts on the market and meme stocks. And like, hopefully we'll come back again in 6 months' time to see where we are. But really thank you once again for coming on the podcast.
Thank you for having me. It's a pleasure.